My mission is simple, to help you protect your family and keep more of your money. I'm here to help level the playing field for families and those who seek the truth. There's always a new way to make money, but at the end of the day, it's your family's security and your legacy that matter. And I promise to help you protect what's really important to you. Legacy Money starts now. Hello. Hey guys, Barry Page here. Fresh from the Infinite Banking Think Tank with my colleague, Jon Webster. And we are live a little late for 5, but we're here. So, Jon, welcome to the program.
Hey, thanks, Barry.
Hey, the whole purpose of this program is to help you live more, give more, and leave more. So we're just going to share some insights of what's happening in the economy and what can happen in your personal economy when you use infinite banking. So there's a lot of news going on, Jon. Maybe you can just give me your thoughts on what's happening and what they're calling the Trump economy. Can you tell me what you think about that?
Well, there is a lot going on. There's a lot of news, more news than news reporters can report on. I think there's a lot of activity. You've got a lot changing with federal money spending. You hear a lot about Trump and Doge. A lot of federal jobs that have been ended or changed. Positions where they've actually moved people from one organization to another. And then you've got money that was found that was being spent probably very unwisely with regard to our country and our economy. And then we've got tariffs being talked about, negotiated, fought over, countries that are having retaliatory tariffs back, and then Trump's saying, well, if you want to do that, we'll just raise the tariff from 25% to 200% if you want to do that. And so we've got some really, really volatile economic things taking place right now. And so the Fed meeting, they're talking about looking at and trying to figure out what to do next. Trump's wanting to change the way that the economy is cycling. I think we'll talk a little bit more about that. Some of the backing that he's talking about. We tend to be a little bit of an Austrian-based mindset. We think that money is actually better if there's something that backs it and stabilizes it.
Yeah, and they're talking about even an audit of Fort Knox. We'll see if that happens. I just read an interesting article earlier this week where they're saying only a small percentage of the gold might actually be there.
Yeah,
so for those of you who don't know, back in the 1930s, FDR confiscated gold. So I know there's a lot of gold bugs out there. Matter of fact, a lot of our Austrian friends really believe in gold. But what happens if I don't think it would happen under this administration, of course, but sometime in the future, if that happened again, do you think that could ever happen again?
Certainly could happen again. I mean, if we don't understand history, we're doomed to repeat it.
Yeah.
And there are very few people who understand history right now in our country, understand the history of our country. And so, gold and silver used to back our currency and made us the strongest, wealthiest country in the world. It made us the strongest currency in the world. Right?
Yeah. So, and of course, that brings to mind another asset that's really gained a lot of attention in recent years. But, you know, they're talking about a Bitcoin reserve. So
Yep.
I don't know if that's a bluff from Trump, but it certainly caused a lot of volatility in the cryptocurrency market. Maybe it's something to kind of play with the Fed over there. And Jerome Powell today said that we're going to leave rates the way they are, and not going to do anything. But with Trump threatening this Bitcoin reserve, I believe that could be a good balance, right? To kind of keep everybody honest. As we like to say, the thing about Bitcoin is it can be traced. And ironically, the Bitcoin, I've heard a lot of complaints. Oh, well, how are we going to afford the Bitcoin? Well, they confiscated it. So the Bitcoin that he's talking about holding in the reserves were actually confiscated, by the feds. So we'll see what happens with that. But we happen to be one of the largest owners of Bitcoin and other cryptos now already. Of course, we had a lot of ETFs and money flowing in from BlackRock and Vanguard and other sources. But yeah, it's fun times we're living in, huh, John?
It's pretty wild. Yeah. A lot of moving, shaking, a lot of things that if you understand it and you study it and you make the right moves, it could be very beneficial.
Right. And that's a good, I guess, way to look at things. We have to think. So many people want to jump into the stock market, real estate, infinite banking for that matter, without really studying, without really doing any homework. I have people call me every week that say they want to do infinite banking. They found me online they say they want to do infinite banking, but they've never read Nelson's book, Becoming Your Own Banker. And they just want to jump in, kind of like people jump into the stock market. They buy mutual funds, they buy stocks without really studying or understanding what's going on. They want to get into real estate. There's a lot of people out there pitching real estate again. Of course, real estate's traditionally been a solid asset, just as gold was, right? But how do you spend it? How do you spend those assets? And so that's really what the banking is all about. Is you can use your capital, your personal capital, versus having to depend on someone else. You can control the banking function. So where do you think infinite banking is going to fit into the economy in the future? Do you think more people are catching on to what's going on with the Fed and their money?
Well, I think people are definitely educating and learning, and the more information that gets out there, the more that people come to the realization that some of what they thought and understood isn't really true. And I think that for the conservative, for those that want stable funds, stable growth, tax advantages on the growth of their money, and access to use and control of their money while they're growing it, while they're using those people are going to continue to drive towards infinite banking, the IBC concept, because IBC becomes a foundational element of the personal and family and business economy. It becomes the base rock that you build from, right?
Right. Yeah, and that's a good point. I think at the end of the day, everybody wants to have some security. They want to have a home. They want to have greater wealth. And but oftentimes we're standing on a slippery slope. God told us to build our house on the rock, right? And
Yeah.
we need a solid foundation. And that's what infinite banking can provide. It actually forces accountability and responsibility, which is a good thing.
Yeah. Yeah. It drives it right into the personal economy. Uh, and so it's like getting to the bedrock and then building that cornerstone, right?
Yes.
You want that solid foundation, you want a master plan, and from that foundation, you can go into secondary investment opportunities. You can go into real estate. You could go into stock. You could go into private placement. You could go into syndication. You can go into uh, uh, private personal business ownership and control the banking process of getting into those other secondary investment opportunities. Um, but would you rather build your wealth, your family's wealth, your business's wealth, or would you rather build the next bank branch downtown for the corporate banker?
Wow. That's I like how you sort of ended that sentence there, another branch, because when Nelson talked about infinite banking over time, and of course the first rule is think long term.
Mm-hmm.
But what about opening up branch banks? I mean, I know personally, I have 8 policies today. I've had a few more in the past. We've consolidated some over the years, but I consider them branch banks. They each kind of have their own little use,
Yeah.
One is for kind of current cash flow. Another is for financing, major purchases. And then I have another one, or a few of them that have helped the kids, with their expenses, college and whatnot. How about you? How have you used infinite banking in your life, John?
Well, we've used infinite banking for real estate investment transactions, down payments on commercial investment properties. We've used it to finance and purchase land acquisition. Land is very hard to get financing on. And so when an opportunity for good land purchase comes up, sometimes there's some really good prices that you can get. And I say when you have access to capital, opportunities will seek you out, right?
Hmm.
And so, and Nelson liked to talk about that. Nelson Nash, he was the founder and pioneer of the infinite banking concept, uh, author of Becoming Your Own Banker, uh, and and Nelson loved to talk about opportunities coming and seeking him out. And so, we once bought some timberland, right, using his IBC. I've done the same thing. Happens to be beautiful timberland with two creeks flowing through it, right? Uh, Two creeks that confluence on the timberland. That's pretty amazing. Um, and so opportunities will seek you out. I've got properties in Idaho that I they sought me out, and because of IBC, we were able to uh, um, make that acquisition. And the value has been very good. But property, vacant land, very hard to get a bank loan on. To get an IBC loan, what does that process look like, Barry?
It's pretty simple. It's almost too simple sometimes. When I first got into business a little over 20 years ago, I was really surprised then you could get a check in the mail in about a week's time. And of course, you could get it wired or overnighted if you really wanted to. But nowadays, it's direct deposit. And it's really as easy as pushing a few buttons. Once you've established your policy, you've capitalized your policy, you can take a loan against it. And that's what infinite banking allows you to do. But there's no Mickey Mouse paperwork, as Nelson would say. You just simply punch a few buttons. Depending on the carrier, you might have to answer a few questions. But it's pretty simple. And the money is, if you have an account already set up, you can have it ACH'd or bank transferred into your account in just a few days. So it's a real easy process. And then repaying loans can be even simpler, really. You can repay the loan. You can add additional PUA to pay extra interest, if you like, back to your system. And it's a nice and simple process. So the companies have come a long way, there's no you don't have to fill out any complicated paperwork. So once you've capitalized your system, and again, it could be a system of policies. You could use 2 or 3 policies or more. Many of my clients have several policies. So it's a pretty easy process.
So you said something there, collateralized against. Talk a little bit more about that. Because I think most people think, well, I'm taking a loan, I'm just taking my money out of the policy.
Yes.
But collateralized against the value, what does that really mean?
I really like the word collateral. I've been using it a lot lately, just to help people understand, because when you go to a bank, traditional financing, they want to know what you have as collateral, right?
Mm-hmm.
And so if you're buying a house, you're buying a house, the house is the collateral, right? If you're buying a car, the car is the collateral. But if you're just borrowing money, they want some collateral. And, you might have to have some money in an account. You might have to have a CD at the bank in order to do it, right? But what if you could have that all in one system, right? So you didn't have to buy a CD. You could get the protection from risk, but you could have the account that you owned and controlled, right? So it's just really a seamless process. Now, when you're getting started, you obviously want to work with somebody like John or myself that can help you with this, or any infinite banking concept practitioner. But the collateral part is what you're doing. You're utilizing the policy as collateral. Your death benefit, right? You are the collateral in that case, the insured's death benefit, and the money is actually borrowed versus surrendered. Now, you could surrender if you want, but you don't have to. I call that killing the golden goose, right?
Yeah.
Why would you want to kill a golden goose that's laying eggs by surrendering a policy?
Right.
And so if you have a policy that has cash value and somebody's asking you to surrender it or exchange it, you might want to get a second opinion for sure, right?
Yeah.
Sometimes there is need or cause to do that, but once a policy is in force and it gets to be a few years, it's seasoned. The older the policy, the more performance that it puts out. So the policies really perform over time. So the longer they're in force, the better they're going to do. So you're using that policy as collateral to answer your question. And we call that collateralize the policy. But if you just think of it in terms of your savings account, whatever amount you have in there available, you can borrow, and that would be your cash value. So you're actually getting 2 uses of your money with the protection of the savings. And then you're getting the financing, and you're also getting the growth on the policy, which is guaranteed to grow over time. So when you take that loan, you collateralize it so the policy does continue to grow. And thanks for asking that. That's a really good way to look at things.
And you get the multiplied value in passable death benefit tax-free.
Well, the tax benefits, boy, that's a whole nother question. But it's hard to beat the tax benefits because your policy is growing tax deferred. And if you use it correctly, for instance, for loans, that will come out tax free. And then that death benefit that you just mentioned is tax free to your heirs. So it's hard to beat the tax advantages of a specially designed life insurance policy. And when you're using it for infinite banking, you can get tax-free growth and tax-free access to your money, and then leave a tax-free legacy for your heirs. So yeah, that's good stuff. Tell me, Jon, I know you work with other agents all over, and you had some agents there at the think tank. We were just in Orlando, Florida, the Infinite Banking Concept think tank, and boy, there was some good things that went on there, some good speakers, and always good to see you and the other practitioners. But you had some agents there. I had there was a new agent that just got his practitioner pin there that I had mentored. So tell me, Jon, what's it like for a new agent? I know we spoke to a few of your agents there at the think tank. What's it like for somebody going to the think tank for the first time? What do you hear, and what kind of takeaways did you get from them?
I mean, I know from some, they came away very tired because they were intaking so much information. It was like almost overwhelming, right?
Right.
And they were super excited, learning so much, and then trying to filter it all out and figure out what they were actually gathering and learning and understanding. And it brings up a good point, Barry, because there's a totally different process to getting an insurance license and being able to sell insurance products, and then actually becoming and educating and training and becoming an IBC practitioner, an infinite banking practitioner, and getting the education and, as you just mentioned, the mentorship to be a practitioner. What does that really look like, and why is it so important to be connecting and working with an IBC practitioner versus just someone who can sell you a policy?
Yeah, well, obviously, we recommend working with an infinite banking practitioner. And I was trying to pull up the logo there. I'll get that in a minute. But if you were, there's a lot of folks out there that are saying they're doing infinite banking, but they're not actually. Like you said, you can get licensed to sell life insurance pretty easily. You go through some testing. Now the continuing ed is probably, to me, more so than the licensing. Man, it is something else. But the infinitebanking.org website has a practitioner finder. If you want to learn more about this, I'd recommend you contact somebody. You can search by state or by name. And of course, if you're out west, Jon's in Phoenix. If you're in the south or the east, I'm on the Mississippi Gulf Coast, and we'll put some links up there here in a little bit. But practitioners go through quite a bit of training. We go through a practitioner program that was built by the Nelson Nash Institute specifically for this matter. Nelson had a deep concern that people could take this and twist it, and that's really what's happened. He devoted a chapter in each of his books just to this, to make sure you speak to the right person, you're using the right type of policy, and that's a participating whole life policy from a mutual company. Yeah. And those policies have certain features that you don't find in other products, ULs, IULs, VULs, that don't really have the guarantees that a whole life insurance contract does. So that's the first thing. And then again, actually working with somebody who's done this, who's practicing infinite banking themselves. And by the way, you don't have to be an agent or even a practitioner to come to the think tank. They started allowing the public to come. They just have to pay to come, and you can learn a whole lot. And then if you want to become a practitioner, you can go through this same training as well. So you don't necessarily have to be licensed or an agent. If you just want to learn more about how it works, there's some very in-depth studies for that. But we keep on top of things, and that's why we communicate, with the Nelson Nash Institute and each other and the companies to make sure that we're providing for the client. So that's really in a nutshell, a little more than a nutshell there. Why you want to work with a practitioner, because he's experienced at the end of the day in doing this, and he's gone through the training. And frankly, that's probably why more agents don't do it, is they don't want to have the additional training. They just want to make a quick buck, and that's why they do it. But if you really learn about infinite banking, we actually get paid a lot less. The whole theme of infinite banking is to help you save on taxes, interest, and fees, right? And so if you'll just follow the plan, that'll happen, and we'll recover money. I relate it. I recently did another show on government efficiency and personal financial efficiency, right? So we have to be efficient with our money, and that's what the infinite banking concept does. And you mentioned something a little earlier, John, because while we help recover those costs that would normally be transferred away to interest and fees, really how you can, Nelson would say, crank up this is to have multiple policies and to buy good investments when they come along, right? When opportunities come along. You brought up the real estate, but whenever you utilize the policy over and over, that creates a velocity. Nelson talked about the grocery store and the P's and the inventory, but I call it a velocity on your money. So can you speak to that a little bit? If you were to, I know you purchased some new office space. Tell us a little bit about that and what effect that actually has on your policy when you utilize it for this.
So if you can use the policy and acquire good investments that have returns, so and good returns on the capital that you're using, so if you can create cash flow that's positive and profitable relative to the investment dollars you're putting there, it will come back and be able to pay back that loan that you use to capitalize, and it will pay it off and speed up the pay down and build more cash flow to build a bigger policy, right? And if your policy can receive it, you can add more paid up additions to that policy. If you start to push up against the MEC limit, then it causes you to need to build another policy and have another bucket that you can put money in. So the more that you can cycle the money and bring back good opportunity, good investment returns, and recycle that money, the more that you can generate and the bigger your policies can build. So that allows you to recapitalize. If you've got equipment purchases, for instance, you buy equipment and you're using it in business, and that equipment makes you money, where are you going to pay that money back to? If you had financed it with the bank downtown, you're going to pay that money back to that bank. If you use that equipment, it makes you money, and your business pays it back to the policy loans with extra profitability, and the equipment pays off, it creates and restores capital to use again, right? And use again.
Absolutely.
And use again. And the more turns that money can make, the more velocity, the more speed at which it can build bigger and stronger policies and fund more policies, right?
Right. It's sometimes hard to get your arms around, but people, when they're first introduced to this, they always want to know, what's the return? What kind of return rate do I get? And while policies do provide a guaranteed rate anywhere between 3 and 4, maybe even 5%, they also offer dividends on top of that. So the policies are growing more than that. That's what the guaranteed rate is, usually 3 to 4%.
Mm-hmm.
But what we're talking about here is utilizing an asset. So the other asset that you might be purchasing that might provide cash flow or some type of profits, maybe it's inventory for a business, maybe it's a piece of real estate that's providing cash flow, or maybe it could be something, it could be a stock, right? It could be there was an opportunity. NVIDIA maybe came down to, $75 and you wanted to jump in and you bought, I don't know, 100 shares, right? And the next thing you know, it went up to $150. Okay.
That was
So
good.
think about that. And if you did not have that money, now we wouldn't want you just to go out and buy some speculative investment like we were talking about earlier. You want to study, right? And you're waiting for that opportune time. So that kind of takes me back, a little bit to the economy. Some people say we're about to be in a recession. The economy is going to crash. Other people, have high hopes. The economy is about to take off. We're keeping jobs in America. We're slashing government spending. There are going to be some new tax cuts on top of the other tax cuts that were made from the last time Trump was in office that were supposed to expire, but hopefully we'll be keeping those in effect. And then if he can add some of these other tax cuts, and again, we're recovering money. That's what we're talking about doing with your own personal economy. The same thing that the government is trying to do. And typically government is not a very good manager of money, but we have some business minds in there now. And hopefully things will turn around. So there will be opportunities if we do have a downturn. That's what I'm getting to. If there's already foreclosures, there's people in debt that need access to capital. So you just have to use your imagination, right? And you have to be on the lookout for opportunities. Maybe study a piece of real estate and look at it. Maybe it's been on the market, whatever it might be. But just by purchasing it, and if you borrowed the money from your policy versus having to borrow it from the bank, like you're saying, you're repaying back into that entity versus if you pay it to the bank or financial company, it's gone. You'll never see the money again. It'll never work for you again, but you've got it over here in an asset. And when you repay, the loan will be whole. The policy, the loan that you collateralized will be whole again. So, I'm glad you spoke on that. And I know you have multiple policies. I have multiple policies. So we're building that system. And I think sometimes people just have to have a little patience, right? They have to think long term about what's going to happen in 5 years, 10 years down the road.
Yeah, for sure.
Yeah.
And so the economy, the Fed was concerned today.
Yes.
Right.
Yeah.
And they say that they have a dual mandate to manage unemployment and to manage inflation.
Right.
That's their two jobs.
Yes.
And they have only a couple tools in their toolbox, according to them. Yeah.
Right.
They've got a couple tools in their toolbox. They can add more money, take away some money, raise interest rates, lower interest rates. Right.
Right.
What else can they do?
That's really about it. They sell assets, they say, and they're shedding their balance sheet. But it's kind of ironic. I frankly don't think they need to lower rates myself, but it certainly causes a lot of turmoil or volatility in the market every time the Fed speaks. Every time Jerome Powell steps up to the mic and the Fed has a meeting, people are looking for a rate change, right?
Yep, everything comes unglued, huh?
Yes, yes. So we'll see how the markets react. They were up earlier today. I'm not sure how they finished. Obviously, I know Bitcoin, crypto was up today. So the chatter, the talk of this Bitcoin reserve that Trump has spoken about also causes volatility in that other market. The crypto market is totally different. There's obviously correlation when money moves from one account to another. Maybe they took it out of a bank account, or they took it out of sold some stocks or whatever to buy the crypto. And of course, now with mutual funds and ETFs that you can buy crypto in, that causes things to fluctuate as well. But there's a lot of ways to skin a cat, they say, right? And what we're trying to emphasize is that you can utilize an infinite banking concept, specially designed whole life insurance contract, to make loans and to make purchases to buy other assets when they're on sale, right? You don't want to buy them at the top. You want to, buy low and then sell them when they're high, right?
Yeah.
But what we're also letting you know is you don't have to sell your policy to do it. So you would have to sell maybe or take some cash that you had working to buy the Bitcoin, to buy the real estate, to buy the gold, right? But you don't have to do that when you capitalize and season a policy, right?
Right. Yeah, the policies and they can be designed and allow the capital to stay there working while you go and use collateral from that collateral loan in order to go and seek the secondary investment. And that's such a powerful thing. Uninterrupted compound growth on your money, right? Uninterrupted growth over a lifetime. And so then, you've been around this industry for 20 years, right?
Yeah.
I think I've 17 years. And so you've seen when clients have gone and talked to someone that sold them an infinite banking, maybe even gave them a book from Nelson Nash and then sold them something, but they weren't a practitioner. And then in a roundabout way, they come to you and they've got kind of a train wreck going on that you have to salvage. And it's a little bit like a train wreck up there in Ohio, right? It's like a chemical spill. Their money is oozing out and getting burned up all over the place. It's a real mess. And you've had to help clean that up at times, right?
Almost right on cue, John. I don't know if you can hear it, but I've got a train track not far from me. And that train, I had to mute my microphone because the train came by right then and there as you said it. Literally, there have been some train wrecks. Yeah, I guess I'll just share one story. Since we're talking about, Bitcoin and silver, I had a client that a few years ago, actually, and he did it probably without my knowledge at all, but not that I could stop him, or that's what becoming your own banker is. You do what you want, right? But anyway, he bought some Bitcoin and he bought some silver. Now, had he held on to it this long, if he still has it, it's come back, I'm sure. But at the time, that's when Bitcoin tanked and silver just, pretty much was flat at best, right? And lo and behold, what happened is he became disabled. Now, because his policy was built correctly, we had a waiver of premium on there. and the policy continued to pay for itself. So the policy continued to grow. Now, he wasn't able to repay the loans then. Matter of fact, we're due to do a review here any time. So we'll see, how things have caught up, because certainly those assets have caught up. But the point is, you have to be careful, right? If you invest in a volatile asset like crypto or like, gold and silver, you could go backwards, and that's not the policy's fault. That's the asset that you bought, right? Mm-hmm. And Murphy's Law says that something could happen. So fortunately, this gentleman was able to have the waiver of premium on his policy, and those assets have come back now. But it can be, scary. And at the end of the day, you can't really spend that other stuff. He didn't want to sell the Bitcoin or the silver because, he thought it could come back, and he didn't want to lose money, right? You just have to be careful. You have to, think through the process, right?
Yeah.
But the policy has continued to grow because the waiver allowed the premiums to be paid, and it stays there. And you can that could happen with anything. It can happen with real estate. It could happen, with the stock market. So whatever you invest in, you just want to make sure you understand how it works and have a backup plan, right? And that's the thing about the life insurance. You can wait on those opportunities. You can, if we're in a decline, you don't have to sell, because the life insurance is there. It's there to supplement whatever other income or assets you may have, right? Okay. So, well, look, John, I really appreciate you being with me here today. I just want to kind of close things out. I want to ask you why you started to practice infinite banking. What got you so interested in it that you said, hey, you know what? I'm going to put some money into this, and then I'm going to, teach others about it. So what got you convinced that you wanted to do this?
Well, ironically, I got into financial services helping people with the desire to get more control over their money and their cash flow, to get more control over debt in their lives. We worked with systems to coach them and accelerate debt payoff to get them control over the money that was coming in and out of their life, so that they could keep more of it, right? And we could put our average client on a track to get out of debt in 8 to 11 years. And what we were using a financial software system that was similar to a GPS. It would look at where they were currently at on the map, and it would look at a goal of getting more control, and it would guide them step by step through that process and do it very efficiently. Well, we showed a guy that I had a lot of respect for, a business mentor, what we were doing in our systems and how excited we were about that. And he dropped a book on his desk, and that book was Nelson Nash's Becoming Your Own Banker. And this guy was self-made millionaire, retired in his late 30s, and he dropped that book on his desk, and he says, if you want to understand what the wealthy do with their money, you need to get this book and read it. Well, I got that book that day, right? And I read it. And I was a little bit upset, bitter, irritated that they had kept this hidden from me for all of my life, right? But I also understood that this was so important, such a strong conservative approach, that it had to become the foundational building block for our clients. And I came from a general contracting background. I've worked with a lot of contractors, a lot of builders, and building is part of my dialogue, right? So it became a foundational building block for the financial strategy for our clients. We started implementing that immediately. In fact, it was I think it was 4 days later, I had my license for insurance, and fortunately didn't get a whole bunch of other garbage in my history in life of life insurance and a whole bunch of garbage of doing things the wrong way. We built it off of the infinite banking concept, and I consider myself very blessed that it was less than a month later I was given an invite to go to a Nelson Nash think tank in Birmingham, Alabama. And this was a gathering of people who were doing and building business with this concept and sharing the knowledge and ideas of how. And that gathering probably had about 40 people there sharing the how to. That was 17 years ago, right? And so, what a blessing to go there and start by gaining knowledge from the person who had taught it for 30 years, right? Nelson Nash started teaching this in the 80s and wrote the book in 2000, Becoming Your Own Banker, and was sharing that knowledge with others. That's why this think tank that we just went to was so important, because it's carrying on the legacy of Nelson Nash.
Yes.
And that knowledge base, that knowledge is so important. Doing it right is so important. And, you know, I've had those train wrecks where we've had clients and agents that have gotten sold the wrong product, sometimes the wrong product. They were looking for IBC. They heard about the concept. They got tied together with someone. They said they could do that. They sold them a UL policy. It was garbage. They went out realizing that it was not right, something was wrong, and they went and got another policy from another agent that was garbage because they were trying to fix the mistake that they had already had. And then they sought out the Nelson Nash Institute, infinitebanking.org, and got tied in with a practitioner to learn and get set up correctly. Important.
Very important, very important. So it all kind of boils back down to knowledge and getting the education and making sure you understand. I have some new clients that had done their homework. I was so, told them you're leaps and bounds ahead of the most people that come to me. They had read all of Nelson's books. They had studied this stuff for literally a couple years, right, before they started. Now, I'm not saying you need to wait that long. I recommend you read the book and get started. But if this is something you want to do. So, yeah, the book, Becoming Your Own Banker, is kind of the Bible. I like to say sometimes if you want to practice this, you really need to get that Bible or that book and study it. It's good to read your Bible, too. As a matter of fact, the book is full of scripture when you get it. Nelson was probably the wisest Christian man that I knew. He knew history front and back, knew the Bible. So that's a good place to start. Well, Jon, thank you so much for joining us today. If you want to get in touch with Jon, you can do it at mpgwealth.com. And if you want to get in touch with me, you can comment below, and there's some links. There will be some links in here, and you can schedule a time to talk. Also, again, you can always go to infinitebanking.org and find a practitioner in your locale, or we meet with people all over the country. So if we can help you, let us know. And thank you so much for joining us today. Jon, thank you. And I'll see you in the next video.
Thanks, Barry.
Take care.
Appreciate it. Yeah.
Bye-bye.